What is going on, traders? Welcome back to the Traveling Trader. Happy Friday to you. Hope you guys have a great start to the weekend. Let us get right into it. Looking at the cryptocurrency market cap, 176 bill. We did have a couple of days of pullbacks after the bullish rally that we saw earlier in the week, and it looks like things are attempting to stabilize right now. We will get into that a little bit later, and I specifically will go over Bitcoin and XRP because there's a lot of interest in those two at the moment. The bull rally was definitely good to us. A lot of our positions exited for profit, up almost 200% on Litecoin before exiting for profit. BNB, a total of 210% before exiting. And we actually re-entered BNB because of the stability that it has shown here, especially against BTC's fluctuations. If you want access to the trade alerts, link is in the description. And I'll also go over the total analysis of the total market cap, the total crypto market cap, and see if we can determine a realistic projection of where we are heading. So let us look into Bitcoin real quick. This is on the one-day chart. You see this is the ascending triangle that was formed going all the way back to November. And you don't normally, the interesting thing about this is you don't normally see ascending triangles coming off of a downtrend, right? Usually it's part of a bear flag, but this extended so long that, you know, it became a pattern in its own right, and it did look like an ascending triangle, but those again aren't usually confirmed in a violent downtrend and bear market. Now, one thing that stands out, and it should stand out to everyone who's used to looking at charts, is how high this RSI is here, right? We hit a high of almost 90, 88 and change on the RSI. And the reason that is something to watch out for is obviously just based off of historical precedents. So yeah, I mean, the best predictor of future behavior is past events, right? So when we look at the charts and you see every time that the RSI was that oversold, we did see major drops. There are a few exceptions on you know, this bull rally here on the way to 20K, but that is a violent rally and it is an outlier. However, every time we see, you know, the RSI oversold, we see a drop of about 20 to 30%. This one was about 30%. This one was 21, 36. Obviously, there was a major drop from the 20K price point here. This was over 60%, but again, that is an outlier. So every time we see the RSI that overbought, I don't know if I said oversold before, but every time we see the RSI that overbought, we tend to see a drop off. Now, as I said before, there were a couple of exceptions back here where the RSI was overbought back in May 2017, but it was on the way to this bull rally, and we actually saw the price increase as the RSI was decreasing. This is actually major divergence here, right? So you have lower highs and you have higher highs. This is called bearish divergence. And we did see the price drop off a bit before climbing. But again, this was a part of a extremely momentous, violent bull rally. And, you know, all bets are off really when we're in outlier territory. That's not normal stable market conditions. So as I said before, you will tend to see divergences in anomalous markets. So anyway, with that said, I mean, we could essentially trade sideways or even continue to climb a bit, even though the RSI is overbought here. If you take a look at something like the Fibonacci, the Fib retracement, you can see at what point we are seeing a stop here. And I bet you it's somewhere around the 0.618 Fib extension. Yeah, so if you look at the Fibonacci, the 0.618 is a very pivotal ratio on the way up or on the way down. You'll tend to see coins stop at these levels here to, you know, take a breather and try to decide what it wants to do next. So we do have to cross this 0.618 Fib level before seeing 5,500 again, which is where this wick that we saw here a couple of days ago hit. One thing that is giving me promise is the on balance volume. This is a running tally of how positive the volume movement is, and you can see that it is curling upwards, meaning that there's more volume, more positive volume or buy volume recently that is driving this indicator upwards. So as long as the OBV continues to maintain positively, then we could see a break of this 0.618 Fib level and a retest of 5,500. Now, if that happens, then what happens to alts? Well, alts priced against USD, you will see them break into new territory as well. You'll see here, this is Bitcoin Cash, and the white line here, I overlaid Bitcoin's chart over it. You can see how closely it follows Bitcoin, right? There are times when it disproportionately is, so if Bitcoin sees a price uptick, it will disproportionately see a rally, right, above the rate of growth that Bitcoin rose. However, it tends to follow the general trend. So we could see around a $450 Bitcoin Cash if Bitcoin goes to retest that level again, the $5,500 level. Again, if you want access to the trade alerts, I do send all of these alerts out when they become valid. Link is in the description. Same thing with XRP. If Bitcoin goes and tries to retest that 5,500 again, you will most likely see the break of this rounding bottom and this clear resistance that we see here going all the way back to November, December times and hitting that resistance again during the bull rally that we saw recently. XRP will most likely go on to retest 40 cents and potentially 50 cents if Bitcoin continuously tries to pierce through that 5,500 resistance point. Now, I'll get back to XRP in a second. I wanted to look at the total market cap real quick. This is the total crypto market cap. This chart is on TradingView. You do have to search a little bit to find it. But what's interesting here is this is the 21-week EMA, right? The exponential moving average. And you'll see that, you know, going all the way back to 2014, there is a parallel to what's going on now, right? So it tried to pierce through this 21 EMA 3 or 4 times before finally breaking above it convincingly. And you'll see here, coming obviously out of the bull run, the famous bull rally of the end of 2017, there was that bull trap that we saw around April. Those of you who were around then remember this, and I'll show you, why that was a bull trap. But ever since we fell below the 21 week EMA in May, we've tried to pierce this 3 or 4 times again. And this bull rally that we saw recently took us above it convincingly. And look at this volume here. This is what you want to see, right? So the number one way in which you can assess or try to assess whether something is a bull trap or not is by the volume. And this goes same thing for stocks as well, right? The first thing that I take a look at is volume to see if the rally is potentially a fake one or a fake out, or if it is a real one. And if you see here, when we were coming off of that famous 20K price point of Bitcoin, this is the total market cap. This isn't Bitcoin, even though it looks like Bitcoin's chart. But when we were coming off of that famous rally, and we started trending down, and then we bounced in April, look at the volume. The volume was not significant at all compared to the volume in the bull rally. So this orange line in the volume, right, is the 20 period moving average for the volume. And you could see that on the way up, we pierced it multiple times, which is what drove the price, continue to drive the price upwards and continue to bring in momentum. And you see how many times it breached that, 20 period moving average. And then once we saw the decline, here, this bounce here, this bull trap, you see the volume, it not even making it halfway to that moving average, right? And it only touched it a couple of times before declining. So that right here, I mean, obviously hindsight is 2020, but when we look back and analyze it and study it, this right here tells you why this was potentially a bull trap, because the volume was shit. So small blip above the 21 week EMA, and then we continued downward. And you see here, what do we see here? This is the volume that is representing this move up here. So everything tells me that the long-term outlook for crypto's total market cap is great, right? You see the RSI here in the middle trading range bound. This is the same level that it was back here in 2015 before we gradually started increasing. And you see that the MACD here is coming from oversold levels below the 0 level. And obviously the volume is amazing compared to what it was all last year. So everything tells me that the crypto market cap, we will likely cross that psychological barrier of 200 billion Again, currently we're at 176. So, and that is part of the reason why I think Bitcoin will go on to try and retest this 5,500 level. Now, looking at XRP BTC, this is even more interesting than the XRP USD chart. So looking at XRP BTC, we have this clear resist or support range going all the way back to September, right? This is the demand zone for XRP going all the way back to September. Majorly oversold on the RSI, oversold on the stochastic, oversold on the MACD, and the on balance volume was trending downwards. And all of these things, all of these oscillators here are now starting to curl upwards, right? And we see this violent bounce off of this support range. I love seeing charts like this because this you have so many points of confirmation that this represents a safe buy, right? If there ever was a safe buy in any market, but this represents a safe buy because you essentially you're buying the low or what is seemingly the long-term support. And you can set a pretty tight stop limit, around this support range. So you're not really risking much, but the upside is tremendous. So the upside to get to these recent highs here is probably somewhere around, I don't know, 40 or 50% from current prices. Let's see. Yeah. So it's around 41%. And then, to get to what we saw in January 2018, that's probably well over 100%. And, this would increase your, so 100, almost 160%. So this would increase your BTC holdings, obviously. So I do like the XRP Bitcoin chart even more than the XRP USD chart. But I do think that, if Bitcoin, again, does go on to flirt with the 5,500 level again, we will see a major increase in some of these alts. And henceforth, the total market cap going on to flirt with the $200 billion range again. A couple of stock trades that are just killing it for us right now is the UWT ETF. This is tied to the price of crude oil. And as you see here, we're up 45% on this. The diamond traders and above get access to the stock trade alerts as well in the trading group. And as you see here, oil is up another almost 2% today. So this UWT oil ETF just keeps killing it as the price of oil keeps increasing. The SPY, which is an S&P 500 ETF, this is one that I'm looking at heavy. I'm extremely bullish on the S&P. As you see here, there is the inverted head and shoulders. We broke above. You see the golden cross between the 50 and the 200. And then if you look at the weekly on the S&P, I mean, the S&P hates being below moving averages, right? And it just never wants to cross below this 200-week moving average here in the green. So every time it flirts with it and wicks to touch it or come near it, it bounces off of it violently. You could see back here in February 2016, it did that. You could see back here in 2011. This is going all the way back to October 2011, it did that. And the last time it was below the 200-week MA was when, we had the post-market crash of 08. That was the last time. And since then, it did blip below the 50 and the 100, again in 2011, back here in 2015, and it did that recently in December 2018, and it is just bouncing violently off there. So I do think that, barring any sort of catastrophe or world crisis, that the S&P 500 will continue to climb. I'm extremely bullish on it, and I'm definitely looking to heavily invest in the SPY ETFs, which follow the S&P 500. And I'll just close out by looking at a couple of pot stocks. You see that the pot stocks continue to kill it, bouncing off of the 200 MA. This is Constellation Brand Inc. And then here we have Aurora Cannabis, which is flirting with that $10 range once again. That is it for today. Leave a thumbs up. Leave a comment if you have a comment or a question. Leave that in the comment section below. Sign up if you want access to the trade alerts, the stock trade alerts, and or one-on-one training with me. I have 2 spots left for April. You get 3 one-hour sessions with me. We do that either over video conference or Skype audio conference or something like that, whatever suits you. But you get 3 one-hour sessions a month. The goal is to take your trading and your technical analysis to the next level. And obviously, we start from whatever your starting point is, no matter how much of a beginner you feel like you are. Subscribe to the channel, hit that notification bell, stay safe out there. Peace.